And the US dollar, by the way, is heading for its strongest weekly gain in nearly 3 years, driven by a mix of tariff shocks and policy divergence. President Trump's sweeping new tariffs on dozens of countries jolted markets, triggering sharp moves in currencies. The yen slid to its weakest since March after the Bank of Japan signaled no urgency in hiking rates. Japan's finance ministry has said it is alarmed by the slide. The Canadian dollar to its lowest since May after Canada faced a steeper than expected 35% tariff. Now, these moves basically reflect the growing strain on global currencies from Washington's aggressive trade strategy. The euro remains pinned near a 2-month low, weighed down by a controversial EU-US trade deal finalized last week. The markets view the impact as skewed in favor of Washington, with French and German leaders voicing criticism. Analysts are saying the deal acts as a fresh headwind for the euro, which touched its weakest level since June 10. In Asia, the Philippine peso slumped to a 6-month low, while Taiwan's dollar hit levels last seen in early June. The South Korean won also weakened, dragged down by its late-stage tariff deal. Despite Trump's fresh attack on the Fed chair, in fact, calling him a mistake, the US dollar held firm. The Federal Reserve left rates unchanged, citing somewhat elevated inflation and a solid labor market, brushing off political pressure. And all eyes now are turning to the upcoming US payroll data. Strategists suggest the US economy may be operating above potential, supporting higher bond yields and continued dollar strength. For now, markets are pricing in a combination of geopolitical risk, central bank divergence, and resilient US data, all reinforcing the dollar dominance. To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.